Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Trust you all had a wonderful weekend out there, and happy new week to everyone in the house. My own name is Sheriff Daramola, and for the next 30-40 minutes, I'm going to be your host as we will be delving into the financial market, looking at things from a fresh perspective as we began the new week. And of course, we are going to be using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action, at least for the first half of this week. And so once again, I welcome you all to this edition, the first edition for the week on the Forex Morning Mastery, your daily dose of financial insights and trading strategies. So far this week, for this week, we are going to be monitoring three financial assets as usual, though my time is getting tighter and tighter, week in, week out, and as a result of this, I wasn't able to do more than one video for my plans for the new week, which was the XAUUSD. And I do hope you guys have watched that video in preparation of the session, and of course you'll definitely have an insight into what our plans is going to be looking like for the week. However, since I did not do any video on the USOILSPOT and the USDJPY, I will be doing a top-down analysis on this asset this morning. So you don't want to miss out on that, as I will be giving you detailed insight into how we will understand the dynamics of the current market structure, and of course use that historical data to decide and find a well-informed trading decisions ahead of both the London and the New York session today. So I encourage you not to miss out on that one. So stay tuned in, and let's make this an eventful one. Now, for those of you who have not watched my video on the XAUUSD, I have the links right in the description box below. You can check it out after the live session. Now, for those of us who are joining for the first time and are wondering what this session is all about, what is it that we really do here? Well, first of all, let me simply put, I already said this earlier, but for those who are joining us for the first time, I usually share a couple of videos during the course of the weekend, which of course gives a detailed analysis into the assets we will be looking at for the new week. And of course, during those videos, I try to identify key possible zones that we will be looking out for trading opportunities. Now, a follow-up details to this video became necessary, and that is why the Forex Morning Mastery was born. So during the Forex Morning Mastery, as technical traders, we usually gather here on a daily basis in anticipation of both the London and the New York session, where we come to do follow-ups and reviews of the position, manage the position, and strategically position ourselves ahead of the upcoming sessions. This session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and my aim here is to how will I put it, to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, and without taking too much of our time, let's dive right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting or influencing the market sentiment for today. And based on the asset we will be looking at for this week, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, to have a broader view of what market participant will be looking at for fresh impetus and as catalyst, I had to include mid-tier economic features, as this week is not really laced with high impactful event. And despite including mid-tier economic features, we do not have any event coming up today, Monday, 19th of February. However, my economic calendar here is not capturing the Japan's machinery order, which was released earlier this morning. I don't know why that is not being captured here, but I hope you have it on your own economic calendar. We had the Japanese machinery order, which came in this morning, and of course was exceeded all expectations by 2.7% for the month of January, which signals enhanced confidence within the Japanese manufacturing sector, which is a very, very good signal. As regards, we talked about how the Japanese economy has gone through 2 consecutive contraction in the last 2 quarters, which technically puts them in a recession, just like the United Kingdom too as well. And these are that now the Japanese economy will be looking forward to data that will probably give some positive light to that economy, and this is a very good start to the week. And of course, we saw how the Japanese yen gained some traction this morning, so we are going to be looking at if this momentum will continue further, or are there chances that it's just going to be a short-term one and that will lead into an uptrend move in favor of the US dollar. So stay tuned in so that you don't miss out on that one. So since we do not have any other impactful event to look out for today, so we shall be relying on our technical skills to strategically position ourselves for the next move, and of course use it to understand the way the market participants are thinking at this point in time. So as usual, the first asset we will be taking on this morning is going to be the USOILSPOT. And on the USOILSPOT, we had quite an interesting last week. Remember that most of last week's trading session was more of buying this particular asset, and of course we did scoop in some significant amount of profit in that regard. However, during the later part of last week, I think on Thursday stroke Friday, we saw some retracement move on the 1 hour time frame. And following the release of the US retail sales data, which of course came in below expectation, we saw how price action resumed the bullish momentum, and thank goodness we were able to capitalize on that opportunity. And as it is right now, the question going into the new week is whether this momentum will continue, or are there chances that sellers could come in at any point in time, as we are within that technical area where we usually see bearish momentum resume in this market. However, before we go into the details, it's important that we also look at what may likely what market participants are thinking, and what the various factors are that are going to be influencing, or that have been influencing, the current market dynamics. Now, I want to also emphasize here that today being a public holiday in the United States, they will be observing the President's Day holiday, and due to this, we might likely see some subdued trading activity, resulting into a probably narrow range or low volatility market conditions, especially during the New York session. So we need to take this into consideration and have it at the back of our mind that we might not see any major traction happen today. So let's keep that in mind. Now, amidst the expectations of the Federal Reserve maintaining its current interest rate, recent data has already led to challenges for crude oil prices, of course. Now, the combination of higher consumer prices, remember last week we witnessed unprecedented data coming in favor, showing that there is a stickier inflation in the United States, further emphasizing the fact that the Federal Reserve may likely leave interest rate higher for an extended period of time. However, on Friday, following the retail sales data, which of course is also considered to be an inflationary measure, and that data came in below expectation, this has of course shifted the market dynamics in one way, as we have a dichotomy right now where some market participants are thinking that due to the retail sales data, we might likely be seeing a rate cut in the month of March. Of course, we have some people holding on to that bias too. Now, we also have the geopolitical tensions in the Middle East following Israel military raid on Gaza's second largest hospital, leading to its cessation of functioning at this point. And this, of course, is further stabilizing the prices of oil. It's not making oil prices drop further due to heightened concerns regarding disruption of oil supply, from that particular region. And I did emphasize last week, where we saw the monthly oil market report from the International Energy Agency, which downwardly revised the global oil demand growth, remember. And prior to that, we also saw the OPEC Plus monthly report, which envisaged that there's likely going to be high demand for oil in the year 2024 and 2025. So these are contradicting reports. And of course, we do know how the OPEC Plus members are trying to artificially increase oil prices by cutting oil production, doing everything within their means to ensure that prices of oil rise. Now, if we are going to consider all this, their monthly report does not hold water for me, actually. And I know that they will definitely want to be looking out for ways to escalate oil prices. But that being said, they are a major block in this market environment, and we should also take it, we should also at least understand what they've said so far. So in the current uncertainty in the market, what we are going to be doing this morning is to try to understand how market participants are taking this data, how they are taking this information, and how they are actually reacting to what these fundamental factors are saying. Now, to have a better view into what is really going on here, let's quickly take a technical dissection of the current market structure. And to do that, we will start with a daily time frame, where I was able to take into consideration the nature of price action since the month of July of last year. Now, that's an historical data of about 7 to 8 months, if I am correct. And the first thing I was able to identify within this time frame is that key level at the $78.50 area. Now, if you look at this level, you will see how it had played a major role in the last 6 to 7 months, determining where price action will be going. Now, if we go to as far back as the month of July, we saw how that same zone was serving as a demand niche in this particular market. We saw this. We saw buy pressure here in the month of August. We saw buy pressure here between the month of August, during the later part of the month of August, taking price to the highest level it had been in the last 1 year. That's around the $93, $94 zone, before price action crashed again. Initially, it was supposed to be a retracement move, but as we saw here, as soon as price got into the $78.50 level during the first week of November, price broke down that structure. And ever since price broke down that structure in the month of November, price action had continued to trade below the $78.50 level to further emphasize the strength of the sellers in this particular market. And during the previous week, despite, remember, we were buying this asset during the previous week, we actually took advantage of some bullish opportunity, but as soon as price got into that $78.50 area, we begin to notice selling pressure resume from that particular area again. And what does this simply tells us? It tells us that this area is a strong selling niche for market participant here. So every time price comes into this area, we usually see bearish pressure resume from that area. So we are at a very crucial juncture, and this level, considering the fact that it had played a major role in determining the direction of price action, we are going to be focusing on this particular area. Now, in as much as price action has been finding bearish momentum, something interesting happened at the beginning of the month of December of last year. Now, despite the strong bearish momentum, as soon as price got into that area around the $68 and $70 zone, we begin to notice that sellers were finding it difficult to break through that particular area. And as a result of this, we begin to notice higher lows come up on the chart, and this went into the beginning of this year. And as you will see, the series of higher lows here, after connecting them together, we have a beautiful ascending trend line, which further portrays that buyers may likely be trying to break out of this zone, hereby giving us a potential reversal pattern to work with. And the $78.50 level at this point in time may serve as the neckline of this reversal pattern, where the breakout of the neckline will be all we need to validate the potency of this reversal pattern. Now, with this information we have gathered so far, you agree with me that we are at a very crucial juncture in this particular market. So I was able to identify a simple setup on the 4 hours time frame, which we will be using to position ourselves for the next move for this week. And what I actually did on the 4 hours time frame was to take into consideration the nature of price action since the month of February began. And if you look at the structure closely, you will see how consistent and uniform price has found higher highs and higher lows. And after connecting the series of higher lows here, we have a couple of ascending trend line which further emphasize the strength of the buyers in this particular market. And of course, you know how we use our trend lines in this community. They are an ascending trend line in this case scenario. We of course want to, if price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying this asset, and we wouldn't be considering selling unless this ascending trend line is breached and broken to the downside. Now, considering the fact that price remains above the ascending trend line, if you are a long-term trader, you do want to be having a buy stop order above the key level here at the $78.50 area to capitalize on that uptrend move. And of course, you want to be having enough breathing space for your stop losses. Having a stop loss right below the ascending trend line makes quite a lot of sense at this point, dovetailing to about 100 to 150 pips depending on where your entry point is. Now, with the information we have gathered here on the 4 hours time frame, let's scale down into the 1 hour time frame, where we will be able to see in detail what market participants have been doing since the beginning of this week. Now, scaling down into the 1 hour time frame, you will see we begin to see things more clearly. Now, since the new week has begun, you will notice that price action has been confined within a range that is between the $78 level and the $77.60 area to emphasize the prevailing uncertainty in this particular market. Now, if we consider and go zoom into how the week of this candle has been behaving, one thing you will notice here is that as soon as price tested this $77.60 area, which happens to be the support line of that range, we saw a hammer candle, which from a technical standpoint reveals that buyers are still present in this particular market. And if we are judging from the way the price reacted to that support line, the idea of buying looks more reasonable at this point in time. So it simply means that if the bullish traction is going to continue this week, we can afford to join early enough, even before the breakout of that key level that I showed you on the 4 hours time frame will happen. So in that regard, and of course you know how we use our ranges in this community, we would like to see price break out of the resistance line of this range to give us a signal of buying, and with a buy stop order above the key level at the $78.50 area, we will be adding more buy position to our existing trade, hereby maximizing the potential of this bullish move. So this is how we are going to be managing our bullish expectations in this market. Anywhere above the $78 level seems quite reasonable to join an uptrend move. However, you know how we do it in this community. In as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could come in at any point in time. And remember that I said on the 4 hours time frame, and of course on the daily time frame too as well, we did acknowledge how the $78.50 zone, the area between the $78.50 zone, had played a major role in pushing price to the downside since the month of November of last year. And since price is back into this area, we need to be very careful, as sellers still have a say around this particular zone. And if it so happens that the selling pressure persists around this particular area, chances are that sellers could also come in. Now, if sellers are going to come in for this week, what are we going to see? What do we need to see on this chart that will make us feel comfortable joining a bearish move to the downside? Well, if we look at the structure closely, remember that ascending trend line I shared with you earlier. And of course, I did mention that as long as price remains above the ascending trend line, we obviously want to maintain a bullish bias in this market. However, if this ascending trend line got broken to the downside, this may likely incite some bearish signal, making us get ready for selling opportunities. And look at how beautifully this ascending trend line shares a confluence with the support line of that range at the $77.60 area. So if price can break down both of the structure, this confluence, then we'll have no other choice than to get ready to sell. Now, there are ways through which the structure will be broken. First of all, we may see price break down the structure around this area, around the $77.60 level here. And if you look at it, it's still above that ascending trend line. So we are not going to be selling right away at that point, because price could still respect this ascending trend line to continue the uptrend. It's a possibility. Now, instead, I think price may likely do something like this, do some little bit of consolidation phase around this area where it merges with the confluence here, leading to the breakdown of the structure, retest giving us further confirmation to join that decline to the downside. And like I said earlier, remember what I said earlier, that today being a public holiday in the United States, we might likely be seeing market go through an extended consolidation phase before a traction begins. So this may likely happen, it may not, but let's be on standby to capitalize on whatever opportunity the market presents to us. So this is my simple view on this particular asset, and if anything new happens, probably before the New York session, the timing of the New York session, I will definitely let you know in the comment section of both my TradingView and Telegram platform. So this is my simple view. I don't know if you have any questions or you need some further clarifications. Feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. And I can see we have over 12 people on board, and only one like. Please give the video a thumbs up. Your likes are valuable to me. And of course, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them, and as well help the community to grow. Thank you very much for your support, and I look forward to your likes right now. Thank you very much. So with that being said, here we will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and of course this asset faced some continued pressure throughout the Asian session, and of course a general weakness in the US dollar coupled with the positive Japanese machinery order data, which I did explain earlier, and of course statement from the Japan's finance minister posed challenges for this pair have missed a unexpected thin trading conditions due to the public holiday in the United States, which of course I mentioned earlier, their US president holiday. I think that's how it is called, and I want to think that the Japan's machinery order, which exceeded expectations, rising by 2.7% in January, may be the major reason why the Japanese yen gained some traction during the Asian session today. And of course, considering the fact that the US economy wouldn't be opening for today, this might be a beautiful opportunity for the Japanese yen to gain further traction following a positive economic data to start the week with. Now, adding to this market dynamics is the statement from the Japanese minister, finance minister Suzuki. He made a comment yesterday. He had a speech yesterday, and he made a comment which I think I have the comment somewhere here. Let me look out for it. So it said here that the Bank of Japan holds jurisdiction over monetary policy, but there will be a phase when interest rates will go up. Now, this is a glimmer of hope for buyers of the Japanese yen at this point in time. Interest rate will go up. Remember, this we've had series of speeches from officials from the Japanese economy, from the Bank of Japan governor a couple of weeks ago, where he gave an hawkish statement regarding the pivoting from the current ultra loose monetary policy, which of course gave some glimmer of hope for buyers of the Japanese yen. And of course, we saw the Japanese yen gain some traction following that hawkish comment from the Bank of Japan's governor. However, last week we had the deputy governor of the Bank of Japan emphasizing that though they are to be moving from the ultra loose monetary policy, doesn't necessarily mean they will be aggressive in hiking interest rate, which of course was not what market participants want to hear. And following that report, that remark, we saw how the US dollar rose in momentum. Now, another speech came in yesterday from the finance minister, who is saying that there's interest is likely going to go up. So we are within some interesting political play here, and market participants definitely will be reacting accordingly. And what we are going to be doing as technical traders is to try to see what market participants are thinking through the activity of price action. Now, the National Association for Business Economics Conference, former Federal Reserve official James Bullard suggested that the Federal Reserve should consider lowering interest rate at its March meeting to prevent stifling economic activity amidst rising interest rate. Now, this proposition comes amidst observation of a resilient US economy, as evident by the report we have been seeing in the last couple of weeks. Now, with this whole situation here and with this current market dynamics, how do we intend to position ourselves for the next move? Now, I would like to emphasize here that if interest rate continues to stay higher for an extended period of time, the chances for the US dollar to rise becomes high, because investors will want to take advantage of that attractive window as regards the yield in return if they invest in the US dollar compared to the Japanese yen. So that differential rate is quite huge, and market participants will want to take advantage of that. However, if there are signs that there's going to be a rate cut as early as the month of March, we might be seeing some traction in favor of the Japanese yen. Now, let's look at things from a technical standpoint, and due to the fact that I wasn't able to do a top-down analysis during the course of the weekend on this asset, let's run through the daily time frame and see what is going on from a technical standpoint, and then let's scale back down to position ourselves for the next move. Now, our first point of contact on the USDJPY is the daily time frame, where we do want to be having an holistic perspective into what is really going on in this market. Now, what I did here on the daily time frame was to take into consideration the nature of price action since the beginning of this year. I think somewhere around December last year, so approximately since the beginning of this year, and it's quite clear that the market has been bullish, as you will see here, and this couple of ascending trend line further emphasize the strength of the buyers in this particular market. So this is the one we are going to be using here, and price still remains above the ascending trend line, making us consider buying opportunities at this point. However, if we look at this structure closely, you will see that at every point in time, price comes within that area around the 150.750 and the 151.900. We usually see selling pressure come in at that particular point. And in fact, you can look at what has happened here since the last quarter of last year, and I had to make the 150.800 as my key level for this week. And of course, you can see how the same area had been a strong selling niche in this market for the last 5 to 6 months, I think. And look at what happened as soon as price got into that area during last week's trading session. We begin to see selling pressure resume from that zone. Now, what this simply tells us is that sellers are very strong around this area, and that buyers are finding it difficult to break through at every point in time price gets into that structure. Now, what this technically means is that we are within a seller's territory. And if we consider the speeches from the Bank of Japan's official, last week we heard from the monetary policy official from Bank of Japan that the Bank of Japan is ready to intervene in the FX market if the prices of Japanese yen continues to drop. And we had what the finance minister said this morning, Suzuki, that the interest rate is going higher. That's another positive sign too as well. And coupled with the Bank of Japan's governor Ueda's hawkish comment a couple of weeks ago as regards to their pivoting from their current ultra loose monetary policies, may likely give the yen some traction at this point. And if we consider the fact that we are within a selling niche, definitely it makes sense for us to look out for selling opportunities and only buy if price action breaks out of that resistance level. Now, to guide our decisions for this week, I was able to find a simple setup on the 4 hours time frame. Now, looking at the 4 hours time frame, and after considering the nature of price action since the new month began, that is February began, you will see price had consistently found higher lows. And if we connect the series of higher lows here, you will see that we have an ascending trend line to work with. Now, if price continues to stay above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying, and only consider selling if price breaks down the ascending trend line. Now, if we zoom into the current structure and looking at what has been going on in this market in the last 1 week, it is quite clear that the market has been confined within our key level at the 150.800 and the 159.600 area to emphasize the prevailing uncertainty in this particular market. And you know how we do it. Whenever we identify such ranges, we want to exercise patience and wait for price action to either break out of the resistant line of the range to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. Now, looking at what has happened since the new week began, you will see that price action has broken down the ascending trend line for the first time this month. Now, will this momentum continue? Well, if we look at the last time price tested the high at the 150.800, you will see that price had continued to find lower highs in this market, giving us signs that sellers are gradually gaining momentum behind the scenes. And if price goes ahead to break down the ascending trend line here, which interestingly shares a confluence with the 150.100 area, we have no other choice than to considering selling this asset. So this means that we will have the opportunity to sell even before the breakdown of the support line of that range at the 159.600 will happen. So let's scale down into the 1 hour time frame so we can have a better understanding into how market participants have been reacting to this confluence at the 150.100 area. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. Now, on the 1 hour time frame, you will see here. Now, this is the 150.100. Hello. Okay, I hope you can hear me now. Please let me know in the comment section. I just bumped into the cord on my mic. All right, so we can see here that we had an engulfing bearish candle that sliced through the ascending trend line that has been supporting the bullish momentum since the beginning of this month. Now, with that breakdown, for me, it's a bearish signal. But before we can sell, we need some confirmations like a retest of that structure that was broken to the downside. Now, looking at this situation here, the week started around the 150.285, and then as soon as price got into the 149.875, we saw buy pressure resume from that area, giving us a range to work with, where we obviously want to wait for signals in the form of a breakout of the resistance line for buying opportunities, or the breakdown of the support line for selling opportunities. Now, as it is right now, let me zoom in so that we can see things clearly. I will not be buying this asset unless price action climbs back above the ascending trend line, and which shares a confluence with the 150.285 before joining a bullish move. However, I'm of the opinion that we may likely see an opportunity to buy even before the breakout of that resistance line happens. Now, if it so happens that price was unable to break through the 149.875 and instead we saw a higher low, price climbing above and breaking out of the neckline and retesting it will give us an opportunity to buy even before the breakout of the 150.285 happens. So let's just keep that in mind and see what happens here. Now, but if price does not do that and continues to drop, well, a breakdown of the 149.875 will definitely welcome selling opportunity. So having a sell stop order below that structure makes a lot of sense. And then let's ensure we have enough breathing space for price action to move around. So stop losses will be somewhere above the 150.100 or close to the ascending trend line. So we will be having a minimum of 20 pips to about 35 pips stop loss on this particular asset. So let's see how the market will play out. Our center of focus for today is between the 150.285 and the 149.875, where depending on the direction of the breakout will give us an idea of where price will be going for today. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds because I'm already running out of time here before we move on to the next asset. So I see your comment here, Rory Sang Sekilo. Good morning to you, Rory Sang. Trust you're doing very well. And you said here that do you offer analysis to the other currency pairs such as AUD USD and the New Zealand USD? Of course I do, but that's behind the scenes. That's with people I work with personally. I have a handful of people I work with where they have a bunch of assets they usually look at. So we analyze this together behind the scenes. But what I usually share during the Forex Morning Mastery and of course during the exclusive price action tutorial prior to the New York sessions are assets I personally trade. Okay, so these are the assets I personally trade, and of course I do take on other assets behind the scenes and with people I work with personally. So for the assets I trade, this is what I do during the Forex Morning Mastery, and I can only afford to do 3 assets because I do not have that luxury of time to run through more than 3 assets. So I hope you don't mind. All right, I hope I answered your question, Rory Sang. Okay, so for those who are click on the like button, thank you very much. I really do appreciate. And for those of you who are yet to click on it, please do. That's the cheapest way you can support this community to grow. And thank you very much as you do. So it doesn't cost you anything. Just click on the like button and thank you very much as you do. So in the absence of no further questions, let's move on to the final and last asset on our watch list for today. So the final asset on our watch list for today, gold spot, and so far the new week has begun. We saw that this asset started the week on a strong note as we saw price finding higher highs since the beginning of the week, further extending the rebound we saw happen last week Friday following the below expectation retail sales data that came in from the United States economic docket. And will this momentum continue to the upside, or will it are we going to see a barrier that will lead into the downtrend continuation? Remember, following the US CPI data that came in on Tuesday, was it Tuesday? Yes, which came at an considerably high. further emphasizing how sticky the inflation in the United States is, and that data there gave us the opinion that there are likely going to be interest rates staying higher for an extended period of time, leading to the price of the US dollar gaining traction and pushing price significantly to the downside. However, since price dropped after the CPI data, we saw some buy pressure resume as majority of market participants saw the gold cheap enough to buy at around the $1,990 area, I think. Okay, around the $1,990 area, and we saw some buy traction resume around that area. Then, following the retail sales data, we saw price again gain some more traction. Now, there are two ways to look at this. This bullish traction could be a retracement technically of that bearish momentum, and in fact it could be a reversal setup that will lead price action to find new highs. Now today we are going to be dissecting this, but before I go into the details here, I want to reiterate that I would not be doing a top-down analysis this morning on this particular asset, as I already did one during the course of the weekend. If you had watched my weekend videos, you will be familiar with the structures we are going to be looking at. But if you have not watched it, please check the link right in the description box below and look at it after this session, so you can have a better understanding into what we are looking at. Now, as it is right now, we are on the 1 hour time frame, and for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update to this as what we will be looking at for this week. Now, we saw how the week started here. The first and foremost, which is very significant that we need to acknowledge here, is that, remember, we had a descending trend line in our recent video on the XAUUSD, and look at how price action finally broke out of that descending trend line this morning. Now, with the breakout of that descending trend line, it's a sign that buyers may likely be taking over this market, and that the descending trend line may no longer have the capacity to continue to negate the bullish attempt. But we are not going to jump into conclusions yet, as this breakout could still turn out to be a false breakout. Now, following the breakout of that structure, remember the $2,015 level we identified on the 4 hours time frame. If you had watched my weekend video, you will understand how we got to that point. So we have a confluence of both the descending trend line and that 2015 level broken to the upside. Now, with the situation we have here, the question we want to be asking next is this. Now, since price action tested the 2023 level a couple of times, we can see we have a barrier around this area, as buyers are finding it difficult to break through that point. Now, the question, like I was saying earlier, is will price come back to retest the structures that were broken earlier this morning, maybe the 2015 or the descending trend line, which interestingly shares a confluence with the $2010.50 level to incite an uptrend move. So this is what we are going to be looking at this morning. So I would like you to pay close attention to my explanations. Now, looking at the structure here this morning, after price action has broken out of that descending trend line, you will see that price action is confined within a range right now between the 2023 and the $2010.50 level where it started this week. Now, in addition to this range is this couple of ascending trend lines we have here. I will show you how important this trend line is in a moment. Give me a moment, please. So now look at this structure here. Since last week Wednesday, after price action dropped following the US CPI data, as soon as price got into the 1,985 level, which happens to be our key level for this week, we saw price action begin to find some series of higher lows and higher highs. And when we connected the series of higher lows and the series of higher lows here, we have a beautiful ascending trend line to work with at this point. Now, price is staying above the ascending trend line, and you know how we use our ascending trend line as long as price remains above the structure, we have no business selling this asset. Now look at how this ascending trend line is relating, or is yes, relating should be the right word, how it is relating to the current structure we have here. So I will extend this ascending trend line a little bit so we can see things clearly. So price is, this ascending trend line is right here, and price remains above the structure. And like I said earlier, are we going to see price drop into either the 2015 or the ascending trend line here, which beautifully shares a confluence with both the descending trend line and the $2010.50 level, which is the support line of that range we identified earlier. So if that happens and we see a reversal setup around this area, like a double bottom structure, head and shoulder pattern, or falling wedge, all we just need to do is mark out the neckline of that reversal pattern and buy the breakout retest of that pattern to join an uptrend move. Then with a buy stop order above the $2023 area, we will be adding more buy positions to our existing trade, hereby maximizing the potential of that bullish move. So that's one way to which we can capitalize on any uptrend situation here. That is one. Now the second one is this: if price action instead drops into the structure and breaks down the $2010.50 level, a retest of structure will give us a confirmation to sell this asset, as price will be back within the seller's territory, right below the descending trend line and right below the ascending trend line, and of course the support line had the $2010.50 level. What a beautiful confluence we have here, and let's look out for this particular area if price action ever comes into this area, as it's going to be playing a major role in determining where price will be going for this week. Now, in as much as we considering this possibility, price may not even come close to that area and instead continues to find higher highs. So if price does not drop into the structure and instead continues to climb up, then the breakout of the $2023 area will be all we need to join an uptrend move. So I do have a buy stop order above the structure to capitalize on that uptrend move. And please don't forget to ensure that you have enough breathing space for price action to move around. Below the $2015 area seems quite reasonable. If you are a long-term trader, that's about 80 to 86 pips thereabout. And if you are a short-term trader, you can be looking at this previous low here, which dovetail to about 50 pips thereabout for your stop loss, as we capitalize on that, on the breakout of the resistant line had the $2023 area. So on the XAUUSD for today, it's a simple setup we have here, where our center of focus is basically going to be between the 2023 and the $2010.50 area, where we shall be looking out for a signal in the form of either the breakout of the resistant line for buying opportunities or the breakdown of the support line for selling opportunities. And like I said earlier, if price comes into the $2010.50 level, we want to see how the market will react to that structure to decide if we are going upward or south. So this is my simple view on the XAUUSD for today. I hope I made myself clear, but if you have any questions, feel free to let me know in the comment section. And please do not forget to click on the like buttons. Your likes are valuable to me, and for those of you who had clicked on the like button, thank you very much. I really do appreciate it. And for those of you who are yet to do, please, it doesn't cost you anything. Click on the like button and support the growth of this community, and thank you very much as you do so. I look forward to your comments, your inquiries, whatsoever you have, before we round off on today's Forex Morning Mastery session. And before I do so, I also want to call your attention to the XAUUSD live window link, which I already have in the comment section, and it is pinned at the top of the comment section. You can click on that link click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who do not know what the XAUUSD live window is all about, well, it is a platform born out of popular demand from members of this community, where we come together during the New York session to review, to monitor real-time price action on the XAUUSD. It usually kickstart about 5 to 10 minutes into the New York session and run through for about 5 to 7 hours, depending on the frequency of trading activity for that particular day. So I look forward to seeing you all in the comment section of that platform. And today being a public holiday in the United States, let's see how the market is going to play out. And if we do not have anything, I would let you know on how the day is going to play. So if you have questions, please let me know before we round off on today's session. And please do not forget to click on that like button. Thank you very much as you do so. So I think it's on this note we have come to the end of the first edition of the Forex Morning Mastery for this week, and it has been a wonderful moment with you guys. I really enjoyed every single moment today, and we were able to attend to 3 of the financial assets on our watch list for this week, which includes the USOILSPOT, the USDJPY, and my favorite, the XAUUSD. And in all of these assets, we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. So I hope you marked out these levels accordingly, and let's allow the structure to mature. If you have done so, let's see how this is going to play out. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to use the information you gathered here to make your own independent trading decisions. John Alabi, I see your comment here. Could XAUUSD price also drop from 2030? Well, when it gets to that level, we'll talk about it. Right now, price is around the 2023 and the $2010.50 level. I usually don't like to look far ahead or far behind when I'm trying to project what my plans are for the week. So let's focus around where price action is, and the character and behavioral patterns of market participants around this area will tell us what next to do. And when price gets to $2030 area, we shall see how we will attend to it when it gets to that level. I hope I made myself clear, John Alabi. Thank you very much. So it's on this note, I think we have come to the end of today Forex Morning Mastery session. I still look forward to your likes. We have 7 likes and we have over 12 people on board, so there are some of us who are yet to like this video, and you're still staying online with us. Please, it doesn't cost you anything. Thank you very much as you do so. So on this note, I wish us all the best of luck today, and I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.